Hi everyone, this is Vinny. Hope you're doing well. I have a gold and silver update for you. Now, if you recall previously, I had stated that if gold does a shallow retracement, then we will see mid 1100s taken out. However, if it does pick up steam, pick up momentum, then to expect at least a 50 to 61.8% retracement. Remember, with gold, the retracement's usually about 61.8. You get a decent bounce gold, unlike silver. So that was something that I was looking at. Initially, I did a retracement from these highs to these lows, and that was resistance because right here was the 61.8, and it matched up with this trend line, which is what's known as confluence. When three things meet, that's confluence. So it had a lot of troubles passing this area, and this large candle was quite intriguing because a lot of traders then was expecting gold to go down, including myself. However, that changed when we had this candle, because if you see the long tail, it really actually tried to take out this trend line. And what was confirmation was this candle right here, and this was after the FOMC minutes were announced, after the reporters had read through the minutes, and as it was slowly being stated in the news, that pushed gold up, that pushed the S&Ps and stocks up. Now this right here confirmed that gold has a little bit more way to go to the upside. It's not shallow, so it's not going to just roll over like that. Okay, let's do a retracement now to show you the current retracement levels that I'm seeing. So we go from this high to this low, and this is the 61.8 level, which is 1326, yeah? And 1298 is the 50%. Now, that's already been touched, right? It's already been touched. And you know what? Let me talk about this red candle. That's very interesting. So we do have, though it's short term, we do have an uptrend here, right? And at the top of this uptrend, you see this long red candle. Previous to that, you see a green candle. And whenever the candle is larger than the previous, and in this case, it's an uptrend, so at the top of the uptrend, whenever you have candles like this, it means that there's going to be a possible reversal of trend. And this is what's known as a bearish engulfing candle, because this candle basically engulfs this one. Its body covers up this candle's body. And if this was in a downtrend, such as this candle, basically engulfed this candle. So therefore, it was a bullish engulfing pattern, and thus we have an uptrend move. And what's so interesting is the following session, which is 6 p.m. Eastern. Remember, because this is Globex, right? Each session starts at 6 p.m. Eastern. So the next session, it was hovering very, very low, and it was stuck there. And there was a lot of indecision, and there was a lot of likelihood of it going down. And so I was looking at the hourly chart, and let me show you how the hourly chart looked at that particular time. It's just pretty much zoomed in on an hourly. Each one of these ticks represents 1 hour of trading. So what I was eyeing was this pennant. Remember, for those who have been watching my videos for some time, you know that if something goes down and it forms some kind of a pennant, if the candles are within a kind of like a triangular consolidation pattern, then usually what happens is that the trend has a continuation to the downside. And this is usually projected. So the length of this, the leg 1, is usually projected. Not always, but usually it is, to this side. And so you kind of get a feel for the length of leg 2 based upon the length of leg 1, if that makes sense. And so I was actually up for quite some time. I don't think I went to bed until I think 3 or 3:30 in the morning. I was just watching this. I was kind of excited, to be honest with you, because I had 1254 as my target, because when you do the extension, when you project this length and then you project it down, it goes to about 1254. So I was really really curious as to see what it's going to do, and was really hoping for it to go down, really, because it's very profitable and it's an easy trade. For those who do trading, and for those who are new, how you can tackle something like this when you don't really know, because it doesn't always just go down, right? It could sometimes go up. And in this case, that's exactly what happened. That's exactly what happened, and it just went up, and it had this nice uptrend. Now, previous to this, it tried to go through 1300 and it failed. Failed here, and failed some previous sessions as well. And so the probability was that it was going to go down. However, because of this candlestick, and I think this was 5 a.m., so this was, I think, Europe. This was during the Europe session. There was a huge candle that basically just broke this bearish flag pattern, and it created a new pattern, and that's a short term to the upside. So whenever things like this change, you always want to make sure your trading plan changes with it. You always want to make sure that your trading plan is very flexible. So in case of unexpected things that you didn't plan, and that you're able to quickly change strategies. And for those who are beginners, how you could have traded this is actually quite simple. So we have this wedge here, and what you could have done is done what's known as an OCO, which is order cancels the other. So, and this is through your broker. A lot of brokers have this, where you could put in order here, and you can put in order right there. Usually it's good to put in it below the lows and above the highs. So what you would do is that you'll tell the system, just whatever platform you're using, that if at one point candle touches this level, automatically buy. And if it touches this level, automatically sell. And whichever triggers first, it will cancel the other order out automatically. So that's a strategy that traders use, and also they use that during breakouts too. So when you have squeezes, for those who are new, what it is that the stocks move and sometimes the volatility is very minimal, to the point that very soon it will just break up either to the upside or to the downside, and it will be very powerful, and you want to capture those moves. And so when you don't really know which way it's going, you can put in an OCO order either here or here. In this case, it would actually be best if it's a little bit above there, just to make sure, because sometimes what it does do, it'll go up and then it'll do a head fake and then it'll go down again. So you want to make sure that it's a little bit high so you don't get in trouble, you don't get hurt. So you do an OCO, and let's say if it touches this, then automatically this sell order is cancelled, and you can at least trade a little bit and then get out at a level fits your trading plan. So anyways, okay, so my point is when I saw this candle, when I woke up the next morning and I was seeing this green candle and this green candle, I was like, okay, you know what? The bulls are not finished. It's going to take out 1300 at that point. Because previously it was always failing, and so I was like, hey, you know what? You've got this little flag pattern here. It's probably going to go to the downside, but when I saw all these candles, this one and this one, I was like, okay, you know what? This isn't done. It's got much more movement and momentum to the upside. So let's go back to the daily chart. I want to discuss something else with you. Okay, so here we are back on the daily chart. Let me get rid of this retracement, okay? So remember, when you have like a continuation pattern, in this case it's an uptrend and it's consolidating. If you notice these two lines, it's almost like a pennant, right? Because it's going up, this is a bullish flag pattern, which gives the indication that it's going to go up. Now, will that happen? It may not happen, but you had a bearish engulfing candle here, and we didn't see another candle. There was no confirmation, and this bar is just amazing. I mean, the momentum of on Friday's candle is just amazing, and it also passed this resistant trend line as well. If you see, it's actually a little bit above it. So that tells you that the bulls are still in control. And so at the moment, if everything goes the way it's going, it is going to go to the upside, right? So, and the reason why I want to bring that up, so in this case, it's going up, and it has this little consolidation that's a pennant again. So if it does go up, then what we need to do is project leg one over here. So that's what I'm going to do right now. Let's do a Fibonacci extension, and you want to go from these lows to the highs and to the lows. So we have a 100% level of 1362. What that means is if this from here to here, if that happens, then the end of this continuation pattern will be on this line. However, remember, it's not always going to be like that. It's not always going to be 100%. Okay, it can always stop at the 78.6, 61.8, and it could even be as shallow as 50, right? And also notice on Friday's session, it passed 1291. For those who were actively trading, you knew that there was a resistance at this level. 1291, early in the day, there was a lot of resistance, and this was why. And also there was where this red candle pretty much stopped, give or take a couple of points. So anyways, question is, where is it going to stop? Well, this is assuming it breaks to the upside. We would have to see where it stops. If you really took notice, you will note that the extension level is 1326. And isn't that interesting? Because when we did the retracement from the highs to the lows, 61.8 retracement was also 1326. Not only 1326, but 1326.70. It was the exact same level. So that's very interesting. What else is so interesting is you do have this trend line that will act as resistance. And so whenever you have 2-3 levels meeting together, that's confluence. And if it does go to the upside, what I am expecting is the 50-day moving average, which is the pink line here. And mind you, gold has not hit this line ever since February of this year. And the top end of this Bollinger Band, which is the light blue area, by the time gold makes it up, these two levels should be around this level. So it will act as a strong resistance. Now, could it pass it? Could it go forward? Of course it can. But it's definitely going to be a lot of resistance here. So don't be surprised if it does go to the upside, that it stops in these levels, then it might not even go further from there. So definitely want to let you know about that. Now this 50-day moving average is a strong resistance. Again, like I stated, it hasn't hit it since February. Sometimes it's gotten close. It's never, kissed it goodbye. It's never given a big kiss and went to the downside. So it's very healthy for it to touch it, and I think it will. I think by the time it gets to these levels, this moving day average will be around this area. Now, there are some traders who feel that gold could go to 1400. It's a little bit of a stretch. I'm not saying it's impossible. I'm just not expecting that. Right. Other scenario, obviously, is that it doesn't shoot up to the upside, it just goes down. I'm not looking for that, but I am ready in case that happens. In that case, what you'll see this go down. It won't go fully here. I think it'll go down, and then it'll go up, and then it'll go sideways, and then it'll go down. But I am looking for this to go to the upside. Alright? And when it does that, you should see some kind of a squeeze. As you see here, these Bollinger Bands are slowly contracting. Right? So the Bollinger Bands will tell you when that volatility fire will happen. Give you an indication as to when it would happen. Right? The last one we had was right here. You see the Bollinger Bands contracted, and it had a powerful move to the downside. Right? If we zoom out, here was a squeeze. This was when the Bollinger Bands contracted, we went down. Right? Contracted, it went down. Yeah? So that's what you need to expect here, is that the next level down, if it goes to the 1300s, it could be 1150, or it could even be 1100. So we would definitely have to wait, but let's just take this one step at a time here. Again, I am expecting it to go up. All right, and from there we'll just have to see. Am I expecting 1400? Not really. It is possible, I guess, but we'll just have to see. Now, so the last thing I want to discuss in gold is the Elliott wave theory. Now, I don't use this, and a lot of traders don't really use it, and it's very, very difficult actually to really master Elliott wave. So the premise is that a trend comes in 5 ways: introduction, small correction, long continuation, the correction, and then it's not so long, but it does finish it off with that trend. So this is your wave 1, this is your wave 2, 3, which is your longest one, your 4, which is your correction, which is the corrective move, and then your final 5 before it starts bottoming out. Now the question is, on gold, where are we? Some people are saying that we are still in 3, meaning that like we're not just going to go to the upside and have a massive correction. It may just be a slight 61.8, which is 1326, and then back down continuation. And at that point, it may be 1100 to where we see a correction. So it depends. This could be end of wave 3, or 1100 levels could be the end of wave 3, which is possibly 1150 or maybe even 1100 flat. If the end of wave 3 is 1100s, then you should see a nice corrective move. Probably $200 maybe, I don't know. It should be at least 100, at least 100. And then the last and final one, which is 5. And I stated in my last video some targets for gold. Okay, I did state that the final target was the 2008 lows. That does not mean that gold will hit that target. Okay, I gave you targets because as gold is hitting those targets, as traders, you want to reduce your position, okay, to minimize the risk. That's why I gave those targets. It wasn't saying that it's definitely going to hit high 600 levels, which is, I think it was 681 I stated. But anyways, by the time gold goes below 1,000, which I think definitely is going to be below 1,000, that moving average, that 200 moving day average should be, at that time, I think it should be about 700s. So it may stop at 700s, 800s, and then bottom out there. I don't think 1,000 is going to be rock bottom. I don't think so. But anyways, I'm getting a little bit too ahead of myself. Let's move on now. Quickly into silver. Okay, so with silver, I don't know what to say except it is extremely weak. I don't really like it. Now, I'm not trading silver. I'm trading actually gold through put options in gold miners. I think that's a little bit more profitable than trading futures, but it all depends on your trading style. But anyways, I'm not trading silver. This is just weak. It is super weak. It would probably, if it does shoot up to the upside, if gold does go up, as I'm thinking it probably will, and you'll probably see silver in the low 20s. Let's quickly find out. So do a fib extension from these lows to these highs and to these lows. And yeah, we have a few options. It could go to the low 20s, mid 20s, and then 2081. I don't think it'll go 2081, and quite frankly, I don't even think it's going to go to 2047. It'll probably, if it does go up, it'll probably stay at the low 20s. We'll have to see. I mean, it is possible that gold could go to 1400, I guess. Okay, it is possible that the wave 3 is ended, but at this time, with what's in front of me, there's not enough evidence for me to, strongly say that we are in a nice corrective move to the upside. I think this is just a retracement, and at that level, at those retracement levels at 1326 gold, I would have to see as to how gold is acting. Usually in the past, when it hits the 61.8, it'll touch that level for about 2 times, maybe 3 times, and after that, it's not going to touch it. It's just going to go down. So if it keeps on touching that level continuously, then that's an indication that it's probably going to go to the upside, and that wave 3 has ended, and we are in wave 4. But I'm not expecting that. But we just have to see what happens. So hopefully all this clarified a lot of things. I know it's been a while since I did a video, and hopefully this video makes up for a lot of that period. You guys have a wonderful day, and have any questions, let me know. And you guys have a good one.